Yes, good morning. Definitely, I think this is an important release from a Fed's perspective, at least. They do want to cut. We know that they are ready to start the cutting cycle. But March, yes, looks very early because the labor market has been printing data which was consistent with soft landing, in some instances, no landing as well. So today's print, if it shows a more gradual slowing of the labor market, then that would give them confidence that they can at some point start the cutting cycle. And we are in the camp of June. That's where they start, or May, June. That's where they start the first cuts, if you will, and the labor market will be an important signal in that regard.
Okay, so you're looking towards June. What's really interesting to me is that markets have also been able to rally through that push out of expectations when it comes to the first cut. And take a look at the performance overnight, for example. We've seen stocks rally not just on positive earnings from some of the big tech names, but also this AI exuberance that continues to impact equities. We're seeing investors really lean in now to the AI narrative. Salman, where are you seeing valuations right now? Do you think they're currently justified given where the market's at?
So valuations we find are a very important metric from a long-term perspective, but short-term market timing-wise, it can be quite deceptive, if you will. So you have to look at the cyclical factors to if you want to have an edge, if you will, on if the markets will turn or not. But valuations are demanding, and here in the last year was a very dominant AI year, and we, as you mentioned rightly, it's still a theme which is getting a lot of focus with the tech results, especially which came out. But we have to start thinking about adoption rates of AI, the capex which will be needed to really generate the benefits of AI. It's an expensive undertaking. So I think that's where, as we progress further into the year, we think that the focus will come in. How fast these technologies can be adopted. Are there any copyright, intellectual property, or litigation risks associated with that? And then obviously the data side of things, which is that data has to be very organized for companies to utilize AI technologies. So I think those reality stories will also start to come into play. But right now it's obviously very much Mark is thinking that this is obviously a very powerful development, and leaning into it, especially given the environment is also very soft landing on a macro perspective.
Indeed, Salman. So as you assess all of these moving parts and you look at the regional and global market opportunities, what are some of your highest conviction trades right now and why?
So we have been focused on these large techs because we thought that they are quite defensive as well, even if the labor market starts to crack, because they are very quality companies, quality balance sheets, and yesterday's results show you that these, especially the big ones, are working with different parameters. But we are also have become positive over the last few weeks on energy because of the geopolitical risks as a hedge to the more pro-risk stance we have got as soft landing becomes even more priced in compared to a few months ago. So, but energy is something we are flagging as a potential hedge in this environment.